All right, so I'm still piggybacking on the idea that the drawn liquidity for NASDAQ was this high. I had no expectations of NASDAQ trading this higher again because seasonally May has been bearish. So I wanted shorts. This, however, has been funny to say the least. I had a whole lot of days where I had to be managing risk, sticking to my rules, or I would literally have been crushed in this price action. So from an upside draw standpoint, I was looking at this as the last draw and whether or not we wanted to see price get back above here. For downside objectives, I'm still looking for price to get drawn down here. So these are relatively equal lows. I want to see price make an attempt to get there. Whether or not it pushes higher from there, doesn't matter, but that's my draw. It's options expiry week. Every options expiry week, I look for a short setup around about Wednesday on NASDAQ. So for that reason, today I said that same protocol, just looking for price to trade higher Monday, Tuesday, and then maybe Wednesday we get a midweek reversal and then push. That's my plan going into the week. I don't want to see Monday's low get taken before Wednesday because that gives me a nice low-hanging objective. Even if we're going to close the week bearish, if we're all the way up here, any short idea that the opening price of the week is beautiful. And if the week is going to close bearish, then you can assume that we're going to go below here. I'm expecting a bearish week. I'm looking for my trade up here. From there, I just need a H1 chart. And that was the price level I was looking for, whether or not they want to get back above this. There's not a lot of interest in price action right here. But what we can do is get rid of the extra stuff that we don't need. Everything after 1500, we don't need. Everything before 4 a.m. in here, we don't need any of this. If we don't need any of this, and we're looking at here, so I'm going to temporarily try to put one of those nice zoom boxes in here. So forget about inside here. That's what we're looking at. So if that's what we're looking at, what can we say about the last day? Well, there's a dealing range that was formed inside here. This high to this low. Let's use this box to make life easier. Inside that is the last dealing range formed last week. Since that's the dealing range and we're still opening inside the dealing range levels must be important. Full stop. The algorithm cannot calibrate for a new range while it's still inside this range. We have to first leave this range and then create a new range for the algorithm to start using other levels. So for all intents and purposes, let's look at this high-low equilibrium, eyeballing equilibrium, around about there. That automatically says to me, my trade setup is going to form somewhere either at this low or in the discount portion of this high to this low. That's just intuitive, right? Now, when you look at previous days delivery, we have this down candle overlapping perfectly with this. So that's confluence. It started with consecutive down close candles that did not, let me take this off. Consecutive down close candles that did not take liquidity. So you don't automatically qualify them as order blocks. Did they fill an imbalance? Yes, they did. Consecutive down close candles that sweep liquidity or take an imbalance can be used as an order block, which means if this is your order block, refine to the bodies, those are your key levels. This 50% on this order block again is also overlapping with this from an eyeball standpoint. Always check to see if I'm wrong or if it's just close enough. I'm not sure. But eyeballing 50% of this order block, important. So price opened and traded here, which means automatically this small portion of price is what invalidated the order block. That's the delivery that traded above the order block high. Retracement to the order block, perfect. Precision, right there. But this is enough. What would make me anticipate this guy being bullish is where overnight session forms in relation to this. If you have been diligent and picking your M5 charts, overnight session profiles, and where they form in relation to H1 or daily levels, you should be closer to understanding how to predict what daily delivery is going to form. Those daily deliveries, I call them overnight session profiles. So from a higher time frame, this is all that you need. Now M5, using the indicator that Joshua built, hopefully I'm not butchering your name. What can I anticipate for a trade? Well, it's options expiry week and it's Monday. I'm expecting price to trade higher. How do I time my entries? Is there a news event? No. So I have to hinge on volatile times, but that's a little bit, in the words of ICT, beyond the scope of this lecture. But forget about that. Anticipating the delivery in a bullish market, I'm expecting my trade entry to form at or below overnight session. How much further below overnight session? Well, these are my key levels. 50% of the dealing range, H1 OB, somewhere around here. It's not far-fetched. It's not form-fitting. It should be down here. I didn't factor in this H1 levels in my own trading because the dealing range takes more precedence than the last structure for me. So my trading today only included this 50% line. Under normal circumstances, I would anticipate this being a rejection block. And while it is a rejection block, it's not one that you want to buy here. Because if you buy here, where do you put your stop loss? Below here? Because of the likelihood that it's going to trade here? Then why not wait until it gets here and then take the trade? So for the guys I traded with this morning, you will remember how it looked in real time, how beautiful it is. And while nobody said it, I'm pretty sure somebody wanted to be a buyer here. Nonetheless, we expected the rejection block to be reclaimed, which means most persons don't want to see the rejection block act as support, or most persons would want to see the rejection block act as support. Under this specific condition, you expect the rejection block to fail. So if I was a buyer, I'd expect the rejection block to hold, price to go higher. Under this condition or in this environment, I'm expecting price to go below the rejection block. That automatically tells me, wait for a down candle to form down here, wait for a CSD, beautiful. If you're following that logic, then your trade entry would be there. It's a mechanical stop. First objective right there. And if you're using the half of overnight session, not rule, but idea that I've been sharing, then you would anchor that here and your second TP would be there, assuming you're not looking for much higher prices. There you go. So that your trade idea would be partials there, then the rest you TP here and you walk away and life is good. Done. We got the entry down here, and I'm going to explain why we got the entry down here in some detail. We expected the rejection block to fail. We expected this guy to act as support and push price higher. So we expected a retrade or a retracement towards here. Equities open is this down candle. So equities open starts a delivery that usually creates a Judah swing. Usually. I'm not going to say it always creates a Judah swing because there has to be a reason. In the same way how 50% acts as support or resistance under certain conditions, and sometimes it fails, there must be a reason. The reason for this guy to create a Judas is we're bullish and price is holding inside overnight session at equities open. I don't trade the first M5 candle because that's just sentiment. Whenever a news comes out, you trade the first M5 candle, it's likely to snap back. So just leave it alone, unless you're nimble and you're just grabbing a couple points. So anytime after here, I'm expecting price to trade down here. Price trades to this, rejection block, pushes away. Trades there, pushes away. If you were watching this real time and you're trying to get into a trade, you should say to yourself, usually the order block model forms at overnight session low or high, depending on what we're looking at. Today I'm bullish. I want to see it form at the low. It's not happening. There's no news for me to anticipate when it's going to happen. That automatically makes trading today low probability. It doesn't mean you can't trade. It just means cut your lot size and trade what you see based on your rules. You're holding it inside overnight session. You're doing nothing here. Allow them to finish the Judas. No down candles, nothing to pay attention to. Wham, price gets down here. This candle at 905 gets to pretty close to this. Once that M5 candle closes, it doesn't matter where it closes. Once it closes, you're anticipating the entry for your trade to form. Look at this carefully. You see how far away from the low we close? Price pulls back. You see how this key level, quote unquote key level, is right here? That says the next M5 candle should create your entry down here. Now, what does that mean? That means you're going to see on a lower time frame, this candle printing a down candle down here, and then life is good. Textbook, beautiful, right? So without further ado, we're going to drop into the M1, play around a little. When you drop to the M1, here's that M5 candle we're looking at. The next M5 candle trades down, so it starts at 910. This starts at 905, next M5 starts at 910. 910 trades down. Here's your down candle. This is automatically your order block candidate, but you don't enter until we take this high. That was my entry. Targeting firstly, right here, because that was a nice, from here to somewhere in here was 50 points. And I was cool at 50 points. I know some guys held longer, but that's the framework behind why this setup played. This black line is the rejection block. So earlier I said that we should raid and reclaim the rejection block. Depending on what array you like to see or you like to analyze, you could see in real time the rejection block and this imbalance and that down candle, and you could have a trade that looks like this. If you miss that as well, this is your next trade. There it is. So for today, that was the trade idea. I did not hold for all of that because 50 points is 50 points, man. And I left. Now, since we're doing a call with everyone, if you guys have another pair you want me to look at, feel free to put it in the chat. We'll walk through, and then we'll wrap up. Hi, Ernest. Gold. What is a gold? Absolutely. Where is it? I don't have gold on my list. Okay. Here it is. CL, that crude oil. All right, so most persons, if you're going to look at overnight session, you'd automatically jump into here. But since it's Monday, you never start your analysis on M5. That's madness. For you to get better at framing overnight session profiles, you want to start by understanding how the overnight session profiles get printed or play around higher time frame level. So if I was looking at gold, what would I have seen here? So this is Monday. We're trading inside this range still. We haven't broken out of, sound like a breakout trade, right? That down candle, this high. Why this? Because this is the last daily run that took a major low. Here, down to here. Why am I not incorporating this? Because this is a liquidity sweep. Liquidity sweeps don't house liquidity. There it is. So that's my range. So if I'm playing that range, 50% of the range is somewhere in here. There. So I put my red line at 50%. We are here. That's my key level to watch. So we're still inside the range. There's nothing else to refine. So drop to H1. Don't overthink it. Delivery started here, very close to the 50%. We traded up, took it. If none of this had already formed, you didn't see this. So this is 8 o'clock right here. So maybe it would have been down here. You would have the benefit of seeing all of this. So that candle's low. I'm not marking the FEG, by the way. I'm marking that. Whatever this candle's high is. This to this has no meaning to me. Sir, delivery started, little explain. Rephrase that question for me a little bit. So this is the price leg you'd be focused on. This is a pool of sell side liquidity. The start of the day start of the day is 4 AM for me. So this is a liquidity pool. This is sell side liquidity. It was formed in true day, which makes it true day liquidity. If you want to push beyond that, it was formed inside this day, wherever 1500 stops there that day. That's all we need from this time frame. M5. So in real life, we would be here at 8 o'clock. We would see that market created a high, swept it, then a low, swept it, then we traded higher, which means this high, this is your dealing range. I'm gonna put a fib on since overnight session projections are already looking at something else. Bearish dealing range is created since buy side was taken first. Once we take this low, you expect speed. Bearish dealing range, we've already retraced. Once we retrace, you expect speed. This here is exactly what NAS H1 looks like last week. There was a dealing range Monday and Tuesday. There's a beautiful long up into Thursday, I believe. And then there was a big push. And then it chop. And then today we open and we run higher. But this delivery here is a fractal on every time frame. Yeah. So how would I have gotten short here? I would have missed the entry because since I would wake up somewhere here and I'm looking for speed to happen. So this is important to understand. You're looking for speed to happen. Speed to happen away from here Means FVGs that form here after this retracement stay open. So if you know ICT, IOFED idea, fade it. Mark that low. When it be close below it, this. After this, FVGs start staying open. I would fade this on a 1 minute chart right here. So this is 810. If I go to a 1 minute chart on gold and there's any up candles or gaps inside here, it should form the entry you want. Where is 810? So this is 810. This right here is 810. This is the break on M1. This FVG, you want it to stay open. So the low on this candle is 1962 flat. The moment we trade through this high in that 810 M5 candle here, I'm selling this. So anywhere in here, that spreads allow me to get in. So might be a little bit off. Anywhere in here, I'm going short and I'm putting my stop above the candle that's holding the FEG. So this is the FEG that shouldn't be filled. When this trades up, I'm not expecting it to fill. So the high on this candle should be less than this. So the high on that is 61.93. That's less than 62. That's good enough for me. You're fading that and you're targeting one. You could use one deviation of the dealing range right here and get out right there, right here. And on gold, that's a solid 40 points thereabout. First partials come off there. If it's continuing to expand, then you know you could frame 2 deviations, 1.5, 3.5, whatever you want. You're partialed out already. Let it do what it want to do. But that's gold. Nice and simple. I didn't take this trade. Didn't see this chart before now. So this is hindsight analysis with rules. Let's see what's the next question. Can we get a position management video once you're in the trade? If it's possible to get that once you're less occupied. Okay, sure. Send me that. You can DM me that on Telegram, or I might forget. Can you check EU, GU? Let me just check if somebody sent a question before you. Yes, it's recorded. So I'll do 2 more because my match starts in 5 minutes, but guys are usually late either way. So yeah. Euro USD. Don't think the feed should matter since ICT talks about forex.com. I'm going to use forex.com. I shouldn't have any analysis on this, but wow. The last time I looked at this pair was probably close to here, I guess. Maybe before, who knows? So daily chart on this guy. What are we seeing here? This range looks like the gold range, but it's much wider. The last time we took a major swing point was when we took that high. Closed above it here, making this order block candidate. Price trades up, lots of consolidation here. Then we move low. When this low gets broken, it should be the same protocol as gold. Speed and FEG stay open. So when did we close below that? There. Speed, FEG stay open. Low on that candle, 902. High on that candle. So this actually digged a little bit deeper, but that's fine. Bodies tell the story, wicks to the damage. Would have been nice if it didn't though. Made me look like I know what I'm talking about. But anyway, you're expecting speed now on FEGs to stay open. So you're fading every run into a FEG. You fade that where you're stop above here, if you're looking at this time frame. Any other FEG gets created? No. This, you're fading this, where you're stop above here. All that good stuff. Now let's talk about where's the downside objective once this delivery starts. Naturally, you're looking at the lows. there's a whole lot of commitment here of bodies or wicks not going below this down candle. So I no longer need to focus on that. High to 50%. Not high to low, high to 50% for this one in this condition. So that's what you're looking for. Are there any daily lows above this blue line that were not taken? This one, these, anyone. That's your downside objective once this day closes. So you could see how they delivered here. I'm not sure if this needs to be traded to since it closed this loop, but this would be on my radar for sure. And now that it's closed there, there's no downside objective from a large or a long-term standpoint. So you have to focus on what it's doing here. We have another down candle here. Take that off and put up the line there. We're not trying to get below it. So it's open is tagged. This here, we traded above, came back down to its 50%. You can ignore this and focus here. It does feel like a whole lot of form fitting. This is an order block, or this is a down candle that we traded above. We came back to its 50%. There is no point coming back to 50% again, especially since we went below it. So this swing from here to that high is the range I would play. Breaking them of this suggests higher prices. Breaking them of this and closing them of this suggest movement higher. This looks like a retracement inside that range. So if CPI or any of those news pushes this lower, that would be a nice buy. The fact that we've already taken a daily low here should negate price wanting to go lower, but tomorrow it's volatile. You know, anything can happen. I would expect higher prices though. So you'd have to look above here for where's the draw. I would watch that. That would be my draw if I was trading EU. But don't want to make this a long call. H1. Start of the day, 4 a.m. That's where we are. If I was looking at this at 8 o'clock, somewhere here, and I'm trying to frame where did my delivery start, I'm looking firstly right here. Good old support and resistance. Then I'm looking at this candle's low. And you'll wonder why that candle's low. Liquidity is there. This liquidity was taken. Was it taken in true day? 1500. This is 1500. So this liquidity is not taken in true day. I would want to see price go below here. So now I'd be conflicted because at 8 o'clock, I would be here anticipating a run to this. Well, let's see what M5 says. M5 says overnight session, swept buy side, swept sell side. There has been no retracement. So take a look at this dealing range versus the one that we looked at earlier on, I think gold. Here, that low. There has been no retracement here. That makes me bullish for this day. If we had already retraced, I would want to go short. Them not retracing here automatically has me bullish, but I'm not going to buy here since this draw is so close. Nonetheless, without the benefit of hindsight, I would be watching this. Down candle printed. If they take this high, I'm buying. Full stop. They didn't. I'm not buying. Price trades down, starts to push toward this draw. And I'm now interested in being a buyer as price is trading low. I wouldn't have gotten an entry anywhere in here. So I'd have to be trading late in the day for me to get a scalp. I wouldn't trust it, but seeing a change in the state of delivery down here, especially when all these bodies are resting on that one deviation, would have me trying to trade towards this order block. So this is completely hindsight. In hindsight, when these lows in here get broken, I would be interested in a buy here, somewhere here, to target that. But that's EU. That's the only trade I would take here. True daytime is 4 a.m. to 4 p.m. Just back it up and get to which one you can get. If you're trading and making money, you go for the highest one. If you're not trading and making enough, then I'll go for the one below that. Got those scalps and they on EU. Oh, you got them? Yeah, I wouldn't be trading at this time of the day, but well done, well done. What are your setting for SD? I'm going to assume SD means standard deviation. Just normal stuff, no big deal. Yeah, just normal stuff. 1 deviation, 2 deviation, all the way up. GU, then we end this call, and oops, GBP USD. FXCM. Let me just keep it mechanical and do the forex.com feed. Start on the daily. Now this looks messy. There's a lot of daily highs already taken here, and we're still pulling back. I don't need to factor this far out to find a setup. So you zoom in to the most recent ranges. We have this high as the last high that was taken, or the first high that was taken, and price started to do nothing, one big nothingness up here. After the change in the state of delivery, meaning we have daily lows being broken, up candles lows, I would be interested in seeing a run below this. That's already taken. I'm looking now at buy side, sell side taken. So frame your dealing range around this and this. So a premium run is needed. Here's my premium run. We're still inside premium. So if we're still inside premium on a daily range and we're in a daily dealing range, it's hard to frame something for an expansion here unless there's a catalyst. That's the only time I would go to a weekly chart and look at previous weekly range. Outside of that, not for me. So previous weekly range is going to be this high down to that low. There you go. So today I'd be looking for, can we get a run that trades lower, because we've already traded to premium. Very bullish day. I want to see us get back down here. I don't need that level. If I'm looking for a discount run, I need my discount level just somewhere around here, there, and I need liquidity pool on the way. That would be here. Not looking at this FEG. Most of my attention will be spent on this. So when I drop to H1, I'm just looking for refinements. Here's a liquidity pool. It was formed not in true day. So I'm looking at the true day low. Here we have all of this, which makes that my next target. That's what my analysis would look like. And that would be all for me here. I don't want to see a run into that. On M5, we have completely one-sided overnight session. No retracement. I would want to see price trade higher, but I wouldn't buy above my sell side drawn liquidity. So based on what time I got to the chart, if I got to the chart exactly here, overnight session low has been broken. You can treat this as the same protocol for an expansion lower. However, there is nothing here that says this FEG has to stay open. So I would need some kind of confluence to get involved here. Classical ICT OTE pattern here. The expansion started inside the range and we broke out. Normal retracement protocols, short ideas if this gets to above 50%. I would not take this trade with a lot, like full risk, by the way. I would not, because there's nothing that says they can't retrace here before going low. So this trade is low risk for me, maybe a 1/4%. So 1/4% here, looking for that. Your trade idea would look something like this. Fading premium runs, targeting that. Not the best trade. I don't know what the pip count is like, but it follows the rules, so that would be my trade. I'd not be looking for anything inside here. I would just leave it and end my day instead of trying to give back the profits. Crude oil. What's the ticker symbol for oil? I don't know. If I just type in crude, it comes up. Crude. XTI USD. Okay, thank you. XTI USD. I'm going to assume that either of these are fine. I'm just going to click on one. So eeny, miny, mo here. If not, just repeat the same process on whichever the XTIUS. Just repeat the same process. So daily chart. Zoomed out, this is already breaking low. Failure swing is right here. We've already traded through that. So I can zoom in and look at tighter ranges. I'll use here. So let's see what's here. We have lowest body in this price swing. There's been no attempts to close below this. I automatically anticipate this as a rejection block. This is our range. We're not breaking low. This did grab liquidity. That's your dealing range because this is buy side and this is sell side. Did we run to premium already? Yes, we haven't broken outside of the low. So this is the range you're playing with. So any arrays you're trading must come from inside here. Not up here, not anywhere else, but inside here. So zoom in and look at the chart through that lens. That's basically the chart you have, the chart data you have. Anything else is just aesthetics because you're trying to frame a move that's going to last multiple weeks because crude oil won't move that far in one day. So what do we have here? Refined. Last high that was taken. We pushed low. This would have been the draw, or at least this. Best case scenario, this. Minimum objective, this. This took both of them. So retracement to premium. Eyeballing premium from here to here should be somewhere here. This is my array. I'd expect bearishness after this day. Open with a gap. Then we start to trade lower. This is where we are. This is Monday. So we open now and we have 2 or 3 daily lows here. This we already opened below, so this cannot be on your radar. This swept previous day's low, so this cannot be on your radar either. So the only daily low to look at is going to be here. That is irrelevant. Well, not necessarily. I'll keep that on because we could retrace there. H1, 4 a.m. Wait, why does this look like this? Not a lot. One sec. Too many lines. I don't know what is what. I'll get rid of that. These are the only 2 lines that are important. So these are the levels. This is the one I anticipate they could want to retrace above, and then this is the target. We wake up at 8. So at this point in time, we've already retraced above here. I'm bearish and my drawn liquidity is right here. M5. Let's refresh. Here's my M5 chart. Here's overnight session. Small highs created and raided. Then we traded low, not closing below this inside overnight session. Makes that good old rejection block. So rejection block in a bearish market structure or bearish environment means any down candle that forms here, you expect their lows to be broken. Once we close below, you get interested in shorts. So this is aggressive because it did close below. So this is a very aggressive entry. Here stops above the swing high. When this forms, if I was trading oil, I would sell 50% of this candle right here like that. Put my stop above behave. That. And looking for a run below here. Now, based on rules of engagement, I'm looking for an expansion that goes to at least 50% of overnight session, so I don't have to overthink my take profit. And I would do one of two things. Once we break through this low, so this is the push that closes below here, we retrace, I get in. When it closes below here, if I'm not taking partials, I cannot have risk on this table. I have to take risk off, which means if I mismanage the trade, I don't lose money. No overthinking. The expands through a low you expect it to trade to. You're expecting a deeper run, but you don't want to sell yourself short by closing too early. At least take the risk off the table. TP hit, you walk away, you're done for the day. I wouldn't take this again. I'd consider this one though, but I wouldn't take this immediate entry. This CSD is at the entry, so another entry targeting a break. If this is the range and I got in, if they're expanding lower, we should be making new lows. So if I enter here with less risk, of course, I'm not going to go make 4% here and then give 1% back. That's madness. If I made 4% on this, I'm risking 0.5%. I'll walk away with 3.5 and target new lows. Not this one because it's swept lows. Low hanging objective is this one. So 0.5% risk, 9R, or about 4.5%, or a little bit over that. And they would close to 8%. Life is good, game over. There you go. So hopefully this was entertaining at the very least. Hopefully you learned something. See you on the next one and enjoy the rest of your day or night. Thank you guys. Bye-bye.